we learn from the September ECB meeting? Two things. First off, the ECB has decided to reduce moderately the asset purchases in one of its programs. And secondly, it revised upward some of its economic forecasts. Most significantly of all, the upward revision to inflation and the balance of risk around future inflation shows us that perhaps the ECB is more aware, or admits that it is more aware to the risk that its model don't necessarily capture all the risks that inflation might be higher than currently forecast. So taken together, there was a distinct possibility that markets didn't react well to the announcement. The result on the market reaction was exactly the opposite. The market was actually very reassured by the tone of the ECB. Looking forward to how markets are going to trade over the coming months is probably going to be dominated by a period of expectations management. So namely, we expect an increase of asset purchase program next year by perhaps 20 or 30 billion per month, which is significant, but the market would tend to look for an even bigger increase and tend to be, let's say, overly enthusiastic. The way rates market will trade is that we expect core rates, i.e. Germany and swap rates, to be stable or even perhaps to drop slightly, but the volatility will be fairly limited. For higher fixed income, so higher yielding bonds, we expect the performance would be quite good because low volatility typically benefits them. And overall, we're looking for a fairly favorable conditions in risk market from this ECB meeting.